Remember, counting day, CNBC TV18 will bring you all the action live starting 7 in the morning. But the big story this evening, S&P Global Ratings has revised its India outlook from stable to positive. The firm has also affirmed its overall rating at BBB-. The credit rating agency said that upward revision in its outlook was driven by robust growth and improvement in the quality of government expenditure. Hormuz is standing by with more details. So a change in outlook coming in from S&P. What do they have to say about the possibility of a change in the rating itself, Hormuz?
There's been so much talk going on for so many years about a rating upgrade for India, considering how the economy has done. Finally, there was one step taken towards that, not a rating change, but an outlook change that came from S&P Global. The outlook was revised from positive to positive from stable, but the rating was maintained at a BBB-. Now, what the rationale that S&P Global has cited is that there's robust economic growth, the government's commitment to fiscal consolidation, and a good quality of government spending has been cited as the rationale by S&P Global for this upgrade. Now, what they are saying here is that this robust economic expansion will continue to have a constructive impact on India's credit metrics, and that sound economic fundamentals will continue to lead the growth over the next 2 to 3 years for the country. Now, S&P Global also said that they can upgrade their rating on India if the government debt falls below 7% of GDP on a sustained basis, and also there is a sustained and substantial improvement in monetary policy effectiveness. So these are the two conditions that S&P Global has laid out. But they've also said that they can even revise the outlook back to stable in case they see that this government is shifting away from this path of fiscal consolidation, the current account deficit continues to widen, and India becomes a narrow net external debtor. Now, these are the conditions that they've laid down for a downgrade. What they've said, over the next 5 years, they expect GDP growth to range anywhere between 6.8% to 7.6%. For FY25, they expect a 6.8% growth. By FY28, they expect it to go to 7%. But when it comes to other rating agencies, most of them have continued to maintain a stable outlook on the Indian economy with the ratings to lowest investment grade or just above that. But S&P 500 has finally taken one step closer to that eventual rating upgrade on the Indian economy. Back to you.
All right, Hormuz, many thanks. And staying with the macros, less than 48 hours to go for the government to release the GDP data for Q4. Brokerages paint a mixed picture.